Good afternoon out there to all of my Facebook friends, clients, and the like. It's Jonathan Bengal here, host of Naked Tax Talk, founder of JB Financial. And yes, ma'ams, and yes, sir, I am now a number one best Amazon author, number one best Amazon seller, and a number one best international author as well. So I'm bringing today's quick little mini tax tip to you because one of my clients asked me a rather important question. And I thought to myself, I could keep all this ooey gooey information to myself and them, which I'm going to go into further details with them privately. But for the rest of us, we're going to have like a very overview, very surface level kind of explanation. So today I actually called my show. Oh, by the way, I forgot to say this. It's Naked Tax Talk, babies. It's where we bear down to the naked truth about our tax lives. And we do that by talking about your money, about your personal life, your business life. And yes, I do get asked this question all the time. Why do I show up naked? And that is my way of cultivating courage. So without further ado, because I don't have very much time, I've got less than 15 minutes. So here's what you're going to try to get. Here's what I'm trying to cover in 15 minutes. We're going to try to cover this concept called assets. It's an accounting term that don't know the origins, but it's an accounting term that basically classifies things as valuable. It's something that's in your business that has a value to it, unlike an expense. An expense is something that you spend the money on and you really don't have anything there, so to speak. Assets is something that you're going to be able to physically depends. Anyways, for the most part, just follow me here. Assets are things that, for the most part, things that you can actually touch, things that you can actually possess. So, for an example, assets at the very top of the word asset sits the word cash and cash equivalents. So cash and cash equivalents are like my bank accounts, not credit cards, but my bank accounts, like savings, money market accounts, things of that nature. Cash and cash equivalents is stuff I can actually physically touch. So I don't have a dollar. Oh, I do. So for example, take this very dirty dollar, so to speak, right here. Yeah, baby. So this dollar is considered an asset in my business. In fact, it's was sitting right here in my wallet, which is technically my personal wallet. But in theory, if I owned a store, I would have this in the till, right? This is called an asset. It's something I can touch. It has a value attached to it, a dollar, right? Let's see here. Technically, this microphone is an asset. We call this equipment. Behind me, you can see the plaque that I have there. That's technically furniture and fixtures. That's an asset, right? I can touch that. The desk, this desk part back here is furniture. I can touch that. That's an asset, right? So everything has value behind the asset. And the asset is valued at a few ways. One is, what did I pay for it originally, right? So again, a dollar is a dollar. So for example, if I was to buy the sunglasses and I pay $1 for it, these sunglasses now have a value of $1. Like, that's the value, baby. $1 for my glasses. That's how it works, right? This is an asset. Now, here's the interesting thing about business assets is that the question always gets asked, well, what if I buy the asset and it goes for the benefit of my business? How does that work? And that's a question that gets asked a lot. So here's how this works. We have to have a quick understanding, hopefully. I kind of like those glasses on me. We have to have a quick understanding of how assets get transferred. Now, if you guys have watched my show long enough, you guys should hopefully get an idea that in business, we have a separation from the self and the business. I can still be a sole proprietor and still have a business and still be like, still separate, right? Even though I'm a sole proprietor, it's still kind of technically separate. So if you're a sole proprietor, this is the easiest thing in the world. And the way that works is I can use, if I want to, I can use personal financing. I can use my own personal funds. I can use my own personal cash, my own personal loans, and I can go out and I can get equipment, furniture, fixtures, I can buy buildings. I can do all these things as a sole proprietor, and essentially buy it in technically my personal name, but for the benefit of my sole proprietorship. And so as a result, I'm still have an asset on the books for my business, even though I personally bought it. So this is important. So for example, let's say that you want to go buy a brand new computer, all right? And you're looking at your business funds and you're like, oh crap, like in my business till I only have like $100, all right, $100. And the last time I checked, laptops were maybe, I don't know, 300-400 bucks for a really good one. If you want a kick-ass one, like my friend Justin James, you probably spent a few thousand on one, right? So the point is that you're looking at the dollar value there, and you're going, oh, I don't have the money. So, but I have a personal credit card, and I can take the personal credit card and I can swipe it and buy the equipment that I need and place it into service into my business. We can do that very easily if you're a sole proprietor. It works really well. As a matter of fact, that's how it typically happens, right? Because again, you wake up one day and you say, I'm going to go start business for myself. And so you go and you start buying all these things. Well, you don't have any money coming in. No one gave you money to start a business. That was my case. No one gave me money. I just went and did it. So this is very true of sole proprietors and asset acquisition. So I can use personal funds to go and buy the assets and transfer it into my business. So what does that look like, right? Well, there's nothing really official about the transfer other than we have to show proof that it was for the business. So how do we show proof? Well, I'm going to take a receipt that wherever I bought it from, and I'm going to dock it up. I'm going to mark on there for the business, for my company, whatever. I'm going to maybe take pictures of it being around in my surroundings in my office. So like, for example, if you guys are looking at this video, you're seeing the boom, you see the microphone, right? This is all evidence. Should Uncle Sam come knocking on my door, I'm gonna be like, come in, sexy, come in, sexy. But honestly, I'm gonna say, look, here's the thing. It's clearly you see this, right? It's being used in my business, right? There's no question about it. So it's about us documenting the use of the equipment or of the other devices that we or furniture, whatever, that it's for the purpose of business. So what if the tax man isn't sexy? I love that, Megan. I love that very much. Okay, so that's Megan. In your case, since you are one of my clients, this is what you're going to say. I would love to come talk to you, except that you got to talk to my IRS enrolled agent. Here's his phone number. You go talk to him. Have a great day. Silence is golden. Any attorney out there will tell you that silence is golden. So they come knocking on your door. Silence is golden. Do you hear me? And then you call me and you tell me what's up. So needless to say, yeah. So that's how it works. And this is really important. Like again, if you're a sole proprietor, single member LLC, it's typically a little easier. Now, where it gets complicated is in S corps and C corps and partnerships. That's where things start to get muddy. That's where things start to get really complex. And in those particular incidences, we can still use personal financing, personal monies to buy assets for my corporation, S corporation, and my partnership. We can still do that. That's still allowed. But there's some other stuff in the background that happens that I don't have time to go into the details with you, other than to say it is possible. And usually when you're starting out as an S corp or a C corp or as a partnership, and you have very little assets to begin with, typically what happens is the shareholder or the partners all contribute. This is the word we use, contribute to the business. And we can contribute cash. We can contribute assets like buildings, equipment, furniture, fixtures. We can contribute that to the company. Where it gets really dicey, our vehicles is a great place where it gets dicey. And what I mean by that is I get asked this question a lot. Well, I'd like to put my car in the name of my business, in my S corp or my C corp. I'd like to do that. And in fact, some people have tried to do that. And that's when you're like, why? Why? Right. So here's the special rule as it relates to your car and corporations and S corporations and partnerships is that the title has to be in the name of the business at this point. It has to be in the name of the business at this point. And in theory, there's two ways to go about this. If you personally contribute an asset to any of these other ones, C Corps, S Corp partnerships, I might have something that Uncle Sam calls built-in capital gains. What? Yes, we have to be very careful because sometimes the assets that we contribute can have a negative tax consequence to us. Because even though cash never got exchanged, in the eyes of the government, once you go to the S, the C, or the partnership, it's deemed as what they call it's well, actually reverse this. It is seen as it's a contribution potentially with a negative tax consequence. The only way I can explain it in the last few minutes I have left. My point about this is that if you decide to buy a car in any of these three things, S, C, or partnership, the loan, if you take out a loan, has to also be in the name of the business. Well, if your S or C or partnership has no credit history because it doesn't have its own private credit score, talk to my friend Eileen Gelwith if you'd like to know more about that. Um, is It have to have your own credit. And so because most people don't have credit in their businesses, oftentimes it's up to the shareholders, it's up to the partners to personally contribute. Now, again, this is a highlight, and here's the truth behind this explanation today. There's so much more complexity behind it that it's easier said than done, more often than not. And this is why it requires for you guys to book an appointment with me on my website right here, calendly.com, Jay Bengal Mutual Exploration Meeting, where you come in. Right now, we're gifting 30 minutes of our time to you guys. We're gifting it to you right now. It's a value of $500. That's the honest truth. It's a 30-minute discovery conversation. And it's in this particular meeting that I get asked these questions a lot. Can I contribute? Can I take out cars? Can I take out loans, et cetera, et cetera? So listen, you want to come and find out a little bit more about your tax life and how your assets are affecting your business. As my friend Mika says, so it's a taxable benefit. And the answer is yes, it depends. So the answer is yes, it can. And it can also have a negative tax consequence. And real quickly, what I mean by that is in a CS or a partnership where I have an asset. So here's a classic example. I am a realtor, or I'm in real estate, or I'm doing a lot of rental properties, and I have this house that my parents gave me from years and years ago, and I want to shield it, and I want to go ahead and place it into my C corporation for whatever reason. This is not advice, by the way. So you go ahead and you put it into the C corp, and a few years later, you're like, well, I'm not going to rent it anymore. I'm just going to move in. And so then you move your butt into what was your rental property, which is now your personal property because you took possession of it. And there's some loopholes here, but I digress. So what happens now is you, in the eyes of the government, have done something called a deemed sale. It wasn't actually, like, no money was ever exchanged. Here's the negative side, Mika. There was money that was never exchanged. It's the mere fact that you took possession of it as a shareholder for personal gain. And so Uncle Sam, in his eyes, he goes, so what you really did is you really sold that house to you. And so because you sold it, you're going to have to pay something called capital gains tax to recapture the depreciation. You're going to have to pay some ordinary tax potentially on it, depending on where it's trapped. If it's in a C corp, maybe it's going to be subjected to tax there. So that's the thing, that's the complexity of assets. But in short, if you're a sole proprietor, a single member LLC, for the most part, you can in fact use personal funds to go and buy business assets. You can do that all day long, but we have to document it that it has been purchased. It's purchased for the benefit of the business, and there's a reason why we're buying it. Otherwise, it could be construed as personal, and then you're not allowed. So, with that in mind, I hope this helps to explain a little bit about assets and in business. Again, it's very complex, and if you would like to know more about how assets are impacting your assets, then please feel free to book an appointment. We're doing these things called exploration meetings, and again, I just posted it in the comments. You can click there. You can book an appointment with me. Spend 30 minutes with me. I will get some information from you. And then we're going to go find out if, in fact, we can make your dreams become a reality. So, with that in mind, thank you so much for watching today's tax tips from moi, assets in business. Last but not least, tonight, tune in at 6 p.m. Pacific time. I'm going to interview Abby Vick, who is who's an insurance broker, and we're going to talk about. Are you guys ready for this? Tax-free income. That's right, tax-free income. Not today, but for tomorrow. So tune in to find out what we have to talk about. Who knows where we're going to go with today. I'm feeling a little bit of risky. I'm feeling a little bit, wah, wah, wah. So you never know. Just tune in tonight, 6 p.m. Pacific. And yeah, that's it. So if you thought today was valuable for you, leave me a comment, drop me a line, let me know you enjoyed it. If you're watching this on YouTube, I would love it if you would subscribe, do it right now, subscribe. And then, of course, hit the alert button so you know when I come online spontaneously, because the people out there who know me, I'm very spontaneous. All right, guys, have a great rest of the day, the night, the morning, whenever you're seeing this video. Have a great time, and see you later, alligators. Boom, boom, boom.